I'm afraid that the shock from the COVID-19 is particularly significant, and therefore just the exchange rate adjustment, by nearly 0.5 to 1% is not going to make a huge difference here. We're still expecting April trade to disappoint, and we're expecting the upcoming export numbers to be a minus 17%. And also the imports to be a minus 14. So the numbers suggested from PMI sub-index on trade was particularly hit hard for April, and it is hard to expect that any exchange rate adjustment so far, without a significant magnitude, of course, would be big enough to make a difference.
Yeah, that does seem to be the case. So when you're talking about an export drop in the range of 17%, what does that mean in terms of the impact on the broader economy? We think especially for the manufacturing sector, which will be hit if those orders don't improve going forward.
Well, we think that at the moment, it probably is not showing the most significant negative impact yet. The problem is that we're probably seeing a delay as some of these external sector manufacturers are still producing, even though that the orders are no longer keep coming, right? So the problem is that they probably would first build up some inventory, and as the inventory continue to stay there and not being sold, you probably will see that this will feed into a later capacity utilization loss. And therefore, we think that the biggest hit on the demand from the demand side on manufacturing sector is probably yet to come, because once they actually overcome the first phase of the supply problem in February and March, now is really the issue that we're seeing more of the demand side coming through in April and May, and we expect that to extend, and which could potentially also hit their employment situation, and the laborers could also be potentially set aside at maybe lower pay or even being laid off for some time. So that I think is probably going to come and continue to stay for the rest of the second quarter.